Hello everyone, welcome to James Market Forum. In this video, I'm going to give you another entire thought process on the second trade I took on BTC USD last week, July 2026. An entire thought process from the higher time frame down to my entry and exit. So without wasting your time, let's begin. The first thing I look at is the higher time frame, and the reason is to understand the overall market trend of the instrument I want to trade. So as you can see on BTC USD, we are in a strong bearish trend. Price is creating lower highs and lower lows, lower highs and lower lows. Just as I have explained in my last analysis. So if you haven't watched my video, I recommend you to go and watch my last video on smart money concepts. The first thing I look at is the higher time frame, and as you can see, we are on the higher time frame on a weekly time frame on BTC USD. So when I expand the view of this chart, you can clearly see that we are in a strong bearish trend. Institutions are moving the price of Bitcoin to the downside. You can see it, right? Price is creating lower highs and lower lows, lower highs and now lower low on the weekly. So this tells us that on the higher time frame we are in a bearish trend. So our bias was to only look for sells on the lower time frame. But before we go down to the lower time frame, there are things on the higher time frame we need to consider, like the liquidity, the higher time frame liquidity, and the premium price. So to identify the higher time frame liquidity, I pay attention to the previous weekly high liquidity and the previous weekly low liquidity. So to identify the liquidity properly, so you can see it clearly. This right here is the previous weekly low liquidity, and this right here is the previous weekly high liquidity. This is the previous weekly high liquidity, and this is the previous weekly low liquidity. You can see it clearly, right? So let me expand the chart a little bit. You can see it clearly. Previous weekly high liquidity and previous weekly low liquidity and previous weekly high liquidity. But here is where I want you to pay attention. When price broke the low of this candle, price moved downward with an impulsive candle. You can see it clearly, right? Then when price pulled into the fair value gap area, price collapsed. Did you see? Cool. So, but this low is different from this low. So price made a new low, closing the low of this candle, closing the low of this candle with the body of this short-term high candle. And the logic behind this short-term high candle is either the structure takes price lower, or when price breaks the high of this candle, price is going to retrace into the overall 50% of this bearish institutional candle, the premium area of the overall bearish institutional candle right here. Do you understand? So now we have two plans. From this point to this point, we can see that price pulled into the short-term high area. But here is the scale. This short-term high owns this low, and this range from this high owns this low. So we are going to treat our premium area in two forms. The first premium area is from this short-term high. Then we are going to target the previous weekly low. Then the second premium area is going to be the overall 50% area around this level. If you use your dealing range tool, if you Fibonacci tool from this high to this low, you can agree with me that this whole area is our premium area from this range to this low. Do you understand? Cool. So let's continue. So this brings us to our entry and exit approach on the lower time frame. And on the lower time frame, I use the 1 hour time frame. That is my execution time frame. So let's go down to the 1 hour time frame. So when you look at the 1 hour time frame, you can clearly see that price structure was bullish. And before price switched to a bearish trend, before price switched to a bearish market trend. But when I took this trade, I didn't enter immediately. First of all, I identified the current market structure, which is from this high to this low. So when I use the Fibonacci tool from this high to this low, you can clearly see that we are trading inside the premium area. So, but here is the skill. On the 5-minute time frame where I entered myself, this is what I did. I didn't enter from the break of the structure because we are still trading during the Asian session. So I waited for the London session open. Then when London session opened, price smashed Asian high. Then price broke the 5-minute structure right here, and price gave us an inverse fair value gap candle confirmation right here. So this right here was where I opened my sell limit, and I used about 10% of my account size on this trade, and I placed my stop loss above this swing high, because when price gets to this level, that means my setup will no longer be valid. Do you understand? So once price moved in my favor, breaking this low, I moved my stop loss to break even right here. Then I allowed price to reach the next liquidity target, my target right here. So this trade approximately produced about 4.6%. I'm going to put the result on the screen so that you can see it as well. So this right here was our final TP area, and it was a full take profit right at this point. So if you want to understand the secret behind my decision to take my profit at this point, just leave a comment in the comment section and I'm going to answer your question. That's a promise. So that brings us to the end of this analysis, how I was able to catch these sells from this premium area into this liquidity pool, this equal lows right here. You can see. So if this helped you understand the institutional trading a little better, subscribe to this channel. I post real-time market breakdowns every week, and I teach the exact concept I use inside James Market Forum. Thank you for watching. I'm going to see you in my next analysis.